Okay, hello and welcome to another stage analysis video. I was away for a couple of days at the end of last week, so I was playing catch up a little bit of the weekend, so didn't manage to put out a weekend video, but obviously got out the various blog posts that I do over the weekend, the regular content. So just gonna I thought it'd be useful to do a shorter video tonight, as it's obviously a weekday. Won't be going into the depths of the detail that I do on a weekend video, as I imagine most of you haven't got the time to sit through such a thing. So just going to do a little bit of a shorter video, quick catch up on what's going on in the major indexes, highlight a couple of the breadth posts that I did at the weekend and a few of the market breadth indicators, etc., and have a look through the watch list stocks and the group focus that I did on the gold and silver stocks at the weekend, as obviously they've been coming up in the watch list scans over the weekend, and then they're coming up into today's scans as well. So there's been some good follow through from some of them already. So a bit of a feature from the weekend posts through to the early week trade here. So definitely something starting to go on there with the stage 4B minus breakouts into transitioning into stage 1 for a number of those stocks, and gold and silver itself starting to move as well. So I'll catch up with that in a little bit in the video. But starting today, I'm gonna go through the S&P 500 again, as we got a rebound move today. I talked about in yesterday's post, in the weekend watchlist post, about the fact that the sentiment had got to extreme levels over the weekend. There was lots and lots of posts of people talking about banks going under, financial crash, all of that kind of stuff. It got to a very, very extreme level, and part of the stage analysis method is obviously using that as a contrarian indicator. So it's not something that you use on its own, and it can be obviously hard to gauge. But when you see kind of extremes in sentiment, and it's just everywhere, everything you see is coming up with really extreme views, then it's a potential contrarian signal in the stage analysis method. But as I said, we don't use it as a standalone indicator. It just adds a potential positive towards the weight of evidence. So the fact that was happening over the weekend, and that we were at a potential pivot point with the close on Friday that we saw here, with the close below and the end of the month. So it did obviously set up for a potential for an oversold bounce, which we started to see a start of today. Whether it now follows through is key, whether this can actually push higher back up towards this 21, still declining 21-day moving average in here, and start to push back through up towards the 50-day, or whether this peters out, was a bit of a one-day wonder, and we immediately push back down lower again. So that would be extremely bearish, and we could potentially go to much, much deeper levels if that is the case, as that would be an extreme sign of weakness. But if we do manage to get a good 2 or 3 day move back up towards the 21-day moving average, then that could start to set us up further in the developing stage 1 range that we've been in for a while now. Even though many stocks are actually have moved back into stage 4 with this recent down thrust that we've had, which pushed us into this potential spring type position that we're in at the moment. So at the moment we're in a position to spring, whether it will be confirmed or to fail basically at this point. So as I said, we need to see a push up towards the short-term moving averages here, or obviously failure. So percentage of stocks above the 20-day moving average in the S&P 500 rose up to 16.6% today. If we look at that on a percentage basis, it'd come down from, we were extreme all the way down at 2% every week. So it's definitely reversed more than the 6% that we'd need to flip from a column of X's, from of O's to a column of X's on the point and figure chart. So let's puts it on bull alert status in the lower zone here, but we need to see this flip up through the key 30% level here in order to get a short-term positive status on that market breadth indicator for that. If we flip on to the 195 minute chart, so this gives us 2 bars a day, so similar to a 4-hour time frame, slightly different just 2 complete bars a day. So you can see the spring type action that we've had from Friday's close through to today. So 2.64% move on the day in the SPY here. So it's a decent range that we've got here now for about 4 months. So again, need to get through some short-term levels in here. If this is a spring, then you want to see this, a sign of strength, start to push up and out quickly up through the top of the range, and then any pullback to then hold before then carrying on to higher levels. But if obviously the spring fails, it can't get back through some near-term levels in here and we start to see it rolling over, again, you want to get out very quickly at that point, as that would be obviously a very dangerous situation and we could have a major flush stage 4 continuation breakdown. The weekly chart again shows this potential developing stage 1 range that we've got, although as it's a very weak stage 1 at the moment, we'd call this stage 1 minus at best. So as we started to move up through the 30-week moving average up here and had a few weeks above following the change of behavior, that's when it started to show stage 1's type characteristics. The pullback, although it's held within the range at the moment, it only had a brief close below it last week and has rallied back above. As I said, if that breaks, then that would make a stage 4 continuation. But at the moment, if this can push back up into the range, then that would give more weight towards this being a potential stage 1 developing. But at the moment, it's still a little bit unclear there. The monthly chart, this is a long-term monthly chart with the percentage of stocks above their 200-day moving average at the bottom of the chart, so you can see how it compares to other major stage 4 declines. So the 2008 decline, the 2001, 2002 decline, obviously they were the most extreme that we've seen in the last 20 years. You can see at the moment we've had obviously 2 closes below this 30-month moving average here. So on these previous stage 4 declines, the 2020 COVID low, we had 1 close below. Back in 2018, we only had the 1 close below. You did get 2 brief closes below, but there was 2 demand tails on that in the end of the 2015, early 2016 low. And then back in 2011, there was 1 close below there. So not since we've had these major bear markets have we had 2 monthly closes below the 30-month moving average. See the pullback time during here, it did as well in 2010. But so at the moment, this needs to start to recover really quickly, or it could turn into a much more dangerous situation, as we're much deeper below the 30-month moving average than we have been for a very long time here. Look at the VIX. You can see this again reversed again today, but it still hasn't broken back down from this near-term range that's been developing. We're still well above the 200-day moving average, sitting around the 30 level at the moment. So volatility is still high at the moment. So we're still in a dangerous situation here with that high. We need to see this get back below that 200-day moving average in order to move into more positive territory again. If we look at what's going on in the industry groups, you can see this is the IBD industry groups bell curve using the Bullish percent index for each of the 200 IBD groups. So this drifted off down another minus 1.75%. This was to the close of the week last week into the end of the month. So there was 191 groups, which is 95.5% were in stage 4 in terms of their percentage move. So how I define the stages using the bell curve chart is by breaking the chart down into the different sections. So anything below the 40% level here is in the stage 4 zone. Anything in the 40 to 60% level is in the stage 1 or stage 3 zone, and anything above 60% is in the stage 2 zone. So it gives you a really quick and simple way to see the stages. Obviously, individual stock charts may give you a slightly different picture, but it's as a rough guide. You can do it very quickly. Just look at what the groups are doing, percentage of stocks above their 30-week moving average, the percentage of stocks on bullish percent positive signals here that I'm using for this one. They will give similar kind of readings, so you can give a very good quick sort of flashcard of what's going on, what the stages are, without having to look through thousands of charts and to see whether they're actually in those stages or not. So as I said, I would say it's probably about 90% accurate compared to what if you were doing it manually and looking through the stages. So it's good enough. So it's just a quick rough guide of what's going on. As I track it each week, you can see the changes. So compared to last week, as I said, you've got the minus 17.6% this week. 17.6% this week, but last week it was at 19.35, and then the previous week before that we were at 31.37. So see here, the drift has been down. We've been continuing down over the last few weeks. So if I flip back to here, you can see it's moved quite a way. And now we need to see this in order to move back towards stage 1 territory. We need to see this start to move back towards the center zone again, back into the mid-range. It did get up towards the 50% level when we got to the height of the move after the June into July rally. So we can start pushing back into there and get more groups back into stage 1 again. But at the moment, obviously, all of the groups are consolidating all the way over on the left hand side of the bell curve. So it's extremely oversold in that regard. Doesn't mean it can't get more oversold. It can obviously hang around these levels for a long time, but as we know from looking at this chart before, we're at a very similar level to what we saw at the June low at the moment, and all the groups were sitting in a similar sort of place, hunched up all the way over to the left. So we're obviously when the rubber band, as they say, gets stretched too far in one direction, then obviously at least a snap back is to be expected in that regard. So we could potentially get a snap back move back towards the middle, and if that can then follow through, we could then obviously start pushing through into stage 1, back into stage 2 again. So with our weekly chart that we looked at before in the S&P 500, for example, if these groups do start to move back through in towards the stage 1 zone, and we start to see some more little groups popping back into the stage 2 zone, then there'll be much more chance for a move for the major market into stage 2, as obviously the stage 1 range will have been developing for many months at that point. So since we obviously made some initial lows back in May, June time. So at the moment, as I said, only 9 groups, 4.5% in the stage 1 or stage 3 zone. At the moment, that's more likely to be the stage 1 zone, as we've been coming off of stage 4. So, and 0 groups are in the stage 2 zone.